to It's Your Life for Dr. James J.C. Cooley. I am Dr. Michelle Cooley, filling in for Dr. James J.C. Cooley while he's en route. Welcome to our show, and we are so excited to have everybody on the show today watching us, just sharing this amazing journey and experience that we love to share with the audience. So it's Your Life with Dr. James J.C. Cooley. We're on at 12 p.m., as you know, Pacific Standard Time, live on E360 TV and over 45 live streaming platforms. And we have an amazing guest, an amazing show on today. So this guest today, she is an expert in her field, and she is here to educate, motivate, and inspire the audience. So we're really, really excited to have her today. So let's talk about this guest today, and let's talk about the topic. So the topic today is demystifying taxes with a former revenue officer. And we're going to have a conversation with Tara Monangai. She's a former IRS revenue officer and also a tax professional. She's going to talk about tax filing problems or issues, common pitfalls of businesses and individuals when it comes to taxes, and how to make the tax system work for you, businesses and families, individuals, and finding quality tax help. It's really important to find the best tax professional to help and assist you with your taxes. So let's talk a little bit about our guest today. Tara Monangai. She is a former IRS revenue officer and has been professionally preparing income taxes, both personal and business, for nearly 3 decades. In that time, she has seen how misinformation has cost many, not only financially, but caused heartache. Finances, especially taxes, are a big industry where there are a lot of options to choose from, which can lead to information overload. Tara personally really enjoys all things taxes and believes that in a perfect world, everyone would have access to the resources needed to file their taxes without feeling like they have little to no choice or being overcharged. She started a company called Pennies Add Up, where she will offer targeted tax advice and services to both businesses and individuals to help empower individuals to make the most informed decisions when it comes to their business or family taxes. So audience, this is a very, very important topic when it comes to tax filing. No one likes filing taxes or getting all the information they need in order to make sure it's filed correctly. And Tara's going to explain to us the whys, the issues, advice on it being a less stressful and less heartache issue for everybody. So welcome, Tara, to our show.
Hello, everybody. Thank you.
And hopefully I did not mispronounce your last name, but how do you pronounce your last name?
It's Monangai.
Monangai. Okay, perfect. I almost got it, but So before we start on the topic at hand, can you kind of tell us about you? Like, where are you from? Where did you grow up? And just a little bit about your educational background.
Okay. Well, I'm originally from Phoenix, Arizona. I grew up on the south side of Phoenix. I went to South Mountain High School. Early on, I went to a few trade schools after high school. Later on, I went to a couple of community colleges. And after that, I went to DeVry and the University of Phoenix to continue my education.
Okay. So can you tell us how, growing up, how your family or community inspired you to be the woman that you are today, the person you are today?
Yes. I come from a business-oriented family. I come from one of the largest families in Phoenix. My grandfather, when he moved here from Louisiana, he brought his family. He opened up a business and he gave all of his sons businesses. So growing up, my father had a business. And that's where I saw, I didn't see, going out working for other people. It was always, work for yourselves, take care of your finances, know what you need to do, be self-sufficient, to provide for yourself.
So was entrepreneurship always encouraged in your family growing up about, it's okay to work for others, but was entrepreneurship always stressed? And how What are the challenges and also the rewards of entrepreneurship?
It wasn't always stress, but majority of the people, did have their own businesses and were into entrepreneurship.
Mhm.
It's stressful because you have to be the one responsible for all the ins and outs of everyday business. And you're not looking at someone else to provide that for you. It's easier to go work from somebody and let them pay you. But when you have to, be the business, make sure the business is running right, make sure the money's coming in, it becomes a little hard, and very stressful because you don't want to, put one thing over another and end up, losing your footing.
Wow. So, can you tell us about your professional journey and how, and basically why you became an IRS revenue officer? Because that's a very specialized, I mean, we know they're out there, of course, but why did you decide to become one? And how did your career, let's say, get to that point? Can you kind of walk us through that?
Yes. When I finished school, I didn't want to, go work for anyone. So I started my own tax business. And I was helping a couple of other businesses, an aunt also with her tax business if she needed, some specialized help. But that's basically, how I started. I went and moved to Seattle, Washington back in 98, I think it was. And it was a new area for me. I had put my business on hold, and having small children, I wasn't 100% sure if I wanted to, tackle restarting the business in Seattle. So I was looking at different tax businesses to see if they were hiring. And I came across an ad for a job at the IRS. And I was like, this is how they sent out job advertisements. So it was kind of shocking at the time. And so I applied, went through the hiring process. I didn't start out as a revenue officer. I started out in the collection department, but as an automated collection service department, doing collections over the phone.
Wow. So an IRS revenue officer. So like what credentials do you need to become one? And what skill set really do you need? If someone's interested to be an IRS revenue officer, what skill set that you have experienced in your career that you feel is necessary to become an efficient one?
Well, if you do have some tax background,
Mhm.
because as a revenue officer, you're going to be the face of the IRS. You're going to be the one going out and talking to the businesses, owners. You're going to be the one talking to individuals. So you're going to be dealing with them and helping them get into compliance. So, if you do have some tax background or any accounting degrees would be great, but you don't need them to be a revenue officer. The one thing about the IRS that I love is they're going to train you. And I mean, you're going to get extensive training to do your job and be, proficient in your field.
What did you find fascinating about being an IRS revenue officer that you didn't expect? I mean, when people hear, oh, IRS, oh my gosh, they panic. But what did you find fascinating about the job? And also, what did you learn about yourself when you became one?
I love the fact that I was able to, you know, help people with tax issues. I was able to, answer tax questions. Yeah, I love talking about taxes. Um, you know, Being out in the field, having not always being in the office, traveling was really fun. The one thing I found out about myself was that I don't like taking people's stuff. I prefer to see you succeed. I don't want to have to be the big bad collector,
Mhm.
so I want to help you in any way as I can to get you into compliance so that you can grow and overflow in your field, in your business, in your job. I don't want to have to come and say, be the big bad wolf and say, you can't do this, you have to do this, or give me that. I didn't like that part about the job. That was one thing I didn't like.
Oh, wow. So, the topic today is about demystifying, basically taxes, tax questions. Why did you feel it was important for you to discuss this topic on the show today?
Well, I feel it's important because, in my experience, there are a lot of things people simply don't know about filing their taxes, which lead them to, experience great losses, not only, financially, but, in their possessions as well. I've seen people lose their savings, their homes, businesses, all because they didn't know or were taken advantage of. So it's important that even though you have someone preparing your taxes or assisting you, you still want to know what your responsibilities are because it's going to affect you ultimately. Also, I've seen, online where with an opinion about how you structure your business, it can also affect the way you file your taxes as well. If there, and the one thing people don't really understand, taxes is a business, not just from the preparer standpoint, but from the IRS standpoint as well. It's a business. And then unfortunately, everybody else is in the business to get an upper hand. Mm-hmm. And you're in the middle and you're the one who's trying to figure out, well, where do I benefit in this aspect? So that becomes difficult when you're in the middle and everybody else is around you trying to figure out how they're going to, elevate themselves business-wise. So that's why, I created Pennies Add Up, is to offer the in-depth tax knowledge and in-depth understanding to the IRS and personal tax planning so that and that you have that information and you make the responsible decision to decide if you're going to do this yourself or go out and look for somebody. And you have the questions where you can ask them to make sure that they're going to do the best job for you and not just for themselves.
Can you tell us a little bit you mentioned your company. Can you tell us a little bit about your company, why you started it, when you started it, and how did you figure out what you wanted to name it? I like the name of your company.
Thank you. I just started the company in August, September. And, I didn't want it to be where I'm, doing tax preparations, because I do have a tax preparation business. I just wanted it to help people knowledge wise, to make sure that, they understood who the IRS was, what the IRS was about, also the importance of who your tax preparer is, and it doesn't matter if they're CPAs, tax preparers, tax accountants or chain tax companies. You want to know, even though they're helping you with your taxes, ultimately they're a business and their goal is to be financially successful. And a lot of times looking at this, when we have a business, the object is usually quantity over quality. But when it comes to taxes, it should be quality over quantity. And a lot of people don't see it that way. And when you get these companies and corporations who are doing these tax returns, their idea and their focus is how many people can I get in my door? And when that happens, you see a lot of people who aren't filing their taxes correctly. They're not claiming the deductions they should be claiming. They're missing out on some of the tax credits. They're paying more in taxes than they should have to pay. They're not getting the refunds that they should be getting. And talking to people, I understand, you're getting a couple $1,000s back, $2,000, $3,000 back, and people are happy with that. But you're getting $2,000 or $3,000 back, but you should be getting $5,000 or $6,000. And people aren't seeing that,
And let's hold that thought. We got to take a station break, but we will be right back. If you have any questions or comments for Tara, please, whatever mechanism, whatever stream, whatever platform you're watching us on, please send her those questions and she will answer it. It's Your Life with Dr. James J.C. Cooley. We'll be right back.
James J.C. Cooley from the United States of America, and I am here to just say, first of all, I'm so happy and honored to be on it, to be in the Coffee Book 2023, Unified Brain Z and the other organizations. Thank you so much for giving me an opportunity to be a part of this collection.
Welcome back to It's Your Life with Dr. James J.C. Cooley. I'm Dr. Michelle Denise Cooley, filling in for Dr. James J.C. Cooley. Hey, we're coming back with our guest today, and Tara Monangai, and she's going to be talking about demystifying, tax issues, problems, and audience. If you have any questions to ask her, please, whatever platform you're watching us on, please send those questions to Tara and she'll be answering those things. So Tara, we have a comment from one of our viewers, Teresa Diamond, saying, I wish I had known her when I opened my business. And also we have another comment, but I'm gonna save that for later. So let's talk about tax filing problems. First and foremost, who should be filing taxes?
Well, basically anyone that works or who has taxes taken out of their income or paycheck, business owners, and also some, retired individuals. So wide spectrum.
Oh, okay. So if is there a specific income max that a person has to make in order to file taxes? So let's say I cut grass, or you have a young person who cuts grass and they only made, I'm just throwing a number out there, let's say $1,000. Do they have to file taxes?
Well, it depends if they're working for a company. If they're working for a company and they're getting a W-2, then no. But I will say, if they had any taxes taken out, I would file, because those taxes you'll get back. Now, if they're doing it as a business, then yes, they would have to file their tax return. Anytime you make over $400 in personal taxes, or as a business or as a 1099, then you need to file a tax return.
Wow. So let's discuss tax filing problems. Wow. I know there's a lot. So what, can you give us an example? Let's say, I don't know, just the top three, or the ones that you've seen in your professional opinion. What are some of the top filing tax problems that you have seen that people do?
The top three, let's see. They're not clear on their credits that they can take or deductions that they qualify for. A lot of them are not just filing. they think that they're going to owe, or they have this misconception, so they don't file their tax returns at all. And the third one, let's see.
I'm sure there are many.
There are many. It's just trying to come up with the top three. They're not keeping their tax records,
Well, what others, besides the top three, what other tax filing problems that you see? Doesn't really have to be a top three, but just other issues you may see.
They're not filing the correct forms.
Mm-hmm.
They're misfiling, the proper forms. They're not, when they're filing their taxes, sometimes they think because last year, they got audited, or, some things weren't allowed, they feel that, it's not worth it. They listen to other people's negative, responses regarding taxes, so, they don't feel that they need to file. But yeah, there's a lot, but and they range from a wide range of different problems, but from not keeping your records, to not filing properly, to not making sure you have the correct preparer to prepare your returns, to having the knowledge. I know a lot of people worry about the tax codes and tax laws, and and I tell people that shouldn't matter. What should matter is where you fit in the tax code. So everything else should matter. So you just want to make sure how it applies to you, and all the other things in the tax code, don't apply. So you shouldn't worry about them.
Tara, what are the potential consequences of not reporting income on your tax return?
Well, if you don't report the correct income, or you're leaving out some income, that means you're either going to owe incorrectly, or you're not going to get the best refund possible. Also, when you underreport your income, the IRS will determine whether or not you owe taxes. So what they do is they add that income to your tax return. Now, if it shows that you'll get a refund, they don't mess with it. They leave it alone. But if it shows that you're going to owe, then what they're going to do is they're going to tax interest, penalties, send you a letter and say, you've underreported your income. This is the difference. This is what you owe, and then go from there. And that's how that IRS as a business comes into play also, is because if it's a refund and it's going to benefit you, they're not going to bother with it. Mm-hmm. But if you're going to owe them, then yes, they're going to come after you. But what happens is you only have 3 years to take advantage of any refund that you would qualify for. And what happens after that 3 years is that money becomes somewhat of a donation to the IRS. It doesn't go toward your tax debt, or not to the tax debt, but to the national debt, to pay, that goes to paying off the national debt, or, paying, different states and different programs. That's a donation to the IRS on your behalf.
Wow, I didn't know that. I don't know if anyone wants to donate to the IRS. Oh gosh.
Right. And that's why I tell people, file your return. If it's owed to you, then get it. If not, you're just donating it, and you've worked hard for it. So why not claim it?
Wow. So can you explain to the audience, what's the difference between a W-2 employee and an independent contractor?
Yes. A W-2 employee is an employee that the company sets your hours, your days that you work, and they take out taxes. You have employee benefits such as health insurance, unemployment benefits, 401k. You also, can get vacation time, sick leave, retirement plan. Now, as a 1099 contractor, you just get what you agree to. They don't take out any taxes. You have to pay your own taxes when you file your tax return, and that's based off of what that end number is on your taxes. There are no employee benefits. There's no vacation time. So you set your own hours. You are doing a job. You do the job, you get it done based on the agreement between you and the employer, but you're not set by hours and days.
So, example, let's say someone's works as a hairdresser or a barber. They're a 1099 independent contractor. How important it is to keep documentation as a 1099 contractor when it comes to filing your taxes?
It's very important because then when you send your documents to your preparer, they need to be able to review the documents and write exactly what you're able to claim. If you don't have those documents, then they're just going off of, your numbers. They might not be exact. Now, if by chance you're audited by the IRS and you can't show those documents or provide proof of those numbers, that amount is disallowed. So then you end up possibly owing money when you would have actually normally been able to write it off. So it's important to keep your documents for 3 years after you file your tax return, because the IRS has the 3-year time frame to audit you and to check your return.
I think a lot of people don't know that, especially about the 3-year time frame. So thank you for just informing the audience about that. We have a question from Melodic Kisses. How should gig workers file?
What's a gig worker? Is that a performer?
I don't know. I thought you might know off the top of your head.
Yeah. Well, and I think of a gig as, maybe like a performance, artist.
Oh, okay.
I'm not 100% sure. If you can elaborate, I'd appreciate that. Then I can answer your question more correctly.
Okay. So we talked about, 1099 contractor, W-2 employee. Besides the information that the company sends them regarding to file their taxes, what should they expect in the mail to prepare their tax filings?
Well, they used to send out, the tax forms. If you filed the year before you filed a 1040A or a 1040EZ, then that's what they would mail you the following year. But now everything is pretty much online. So you just, as an employee, besides your W-2, you go online or you have your preparer, they'll, get the form 1040 and file the return for you.
Well, Melodic Kisses did send us a response. She says, basically, a gig worker is someone who works side hustles like DoorDash or Uber Eats. So would you consider them an independent contractor or a 1099 person? Like, can you kind of go into that?
Yes. Great question. As a DoorDash, if Uber, Lyft, those are 1099 independent contractors. So you would keep all of your deductions, all of your expenses, your vehicle expenses, and you would have a Schedule C attached to your 1040 tax return. And on your Schedule C is where you would write off your, independent contractor expenses. Whether it's your vehicle, it's, if you had any expenses that you bought, to operate, the business. So yeah, you would be a Schedule C filer, and you'd attach that to your 1040 tax return.
Well, thank you for answering that. And we have a question before we take break. We have a question from Dr. Sandra Estanzo. She said, you seem really calm as a tax professional and former IRS revenue officer. Do you have a calm experience when others know you as an IRS officer was calling?
I did. And that's just me in general. I'm not going out with the intention of, they're wrong, they should have known. I'm going out is to get the information and to work with you so that you can move forward in a positive light, in a better light, more knowledgeable. But sometimes, you don't find people being receptive, when you say you're from the IRS. But that was always my, experiences. I'm here to help you go from step 2 to step 6 so that you can be successful in whatever business or work adventure, you have going on.
Thank you, Tara. Now we got to take a commercial break, but audience, please have those questions keep coming to Tara. She will answer them. Any comments, any questions? It's Your Life with Dr. James J.C. Cooley. Will be right back. Thank you.
CEO of the J.C. Cooley Foundation, Options, Opportunities, Lasting Choice Program. Our primary mission is to help build a foundation of our youth and young adults and communities. And we encourage everyone to dream big, think big, and be big at everything you do. And the way that you do that is, first of all, you got to believe in yourself. You have to believe in yourself. You have to know that you are here for a purpose. You also have to be able to step out your comfort zone and do things that you probably didn't think that you can do.
Wow, welcome back to It's Your Life with Dr. James J.C. Cooley. We are learning a lot about taxes and common mistakes, pitfalls, just what type of things to look for. And we have an amazing guest today, and Tara is bringing it. So audience, again, if you have any questions, please, whatever platform you're watching the show, please send those questions in because Tara wants to answer them. Any comments or anything, or, if you're going through a situation with your taxes right now, if you just need a little clarity or some resources to follow up on, please just send Tara your questions. Now, Tara.
Yes.
Let's talk about IRS red flags or audit risks associated with transitioning between, let's say, W-2 employment and independent contracting. Can you kind of talk to us a little bit about that?
Yes. Normally, the IRS will do random, audits, during the filing season. But when it involves, and it also they do audits. And it might not be that they're auditing you, but because of a business or business partner you have, or an investor, they might have gotten audited. So because you're associated with that group, that would also cause you to be audited as well. Claiming unusual deductions or unallowable deductions, or claiming an excessive dollar amount. Can, initiate an audit. And, for example, just say you own a car detailing business, and you're writing off a lot of airfare, travel, hotels, expenses, and you're a detailer, in just say Arizona. Well, why are you traveling, in other parts of the country, when your business is located here. So that's where those documentation, comes in and is so important, because the IRS doesn't know what exactly your business is doing or where you travel, or if you're in multiple states. It only knows that your base business is in Arizona. So if that creates a red flag and causes an audit, then you have the documentation. You also can show why you're traveling. That makes a big difference as well, because then they can understand that, okay, you're traveling because, one, you might be opening up a new location, or one, you might have a sister company, or, you might be, working with another company and they, invited you out to promote, something in a different state. So it's important that, whatever you do business wise, you just keep a paper trail, because at any time, you can be audited, and for any reason. So you just want to make sure that you're prepared for whatever comes up.
You know what? IRS contacting you. So basically, if someone gets a notification letter from the IRS threatening bank levies or garnishment of wages, what should they do? But before you answer that question, can you emphasize, and we've heard about scams.
Right.
The IRS will not contact you on the phone and ask you for information. So can you kind of stress that to the audience? And then we can address that question about wage garnishments and bank levies if you do get a letter.
Right. The IRS is not going to call you on the phone. They're not going to send you an email. The only way the IRS is going to contact you is they're going to mail you a letter, and you'll get a revenue officer who comes and knocks at your door or comes into your business. But other than that, they're not going to contact you any other way. Now, if you do by chance get a levy notice, most of the times they're going to come certified. They're not going to just come in plain mail. You will need to sign for it, once they get to that state. I would say the first thing is to do is don't panic. That's their way of saying, hey, I've been trying to talk to you. You're avoiding me. So this is the next step. If you keep avoiding me, call them. You have rights, and what they're trying to do is ultimately is resolve whatever balance you owe. Now, if by chance they've already issued a bank levy or a wage levy, don't think all is lost. Now, regarding the bank levy, the bank basically has to hold the funds for 21 days. So what you do is you have time to contact the IRS, get it resolved, and potentially get that garnishment released so that you can have your funds back in your account. Now, the other thing is with the bank levy, if you contact the IRS and, they, aren't going to release it, they can release part of it. The goal is not to put you in a hardship. So if you need to pay rent or you need to pay some bills, if you provide them with documentation, they can release part of that so that you can pay that. So it's not all lost. So the key thing is just contacting them. And in regards to a wage levy, as long as your employer hasn't sent out that garnishment or that check, then they can also get that released as well. So time is of the essence. So you don't want to just stress out and ignore it, but you do want to contact them. And as far as Dr. Michelle was saying, as far as a lot of tax scams and tax schemes, there are a lot of companies out there that will help you resolve tax issues. Mm-hmm. Now, I'm not saying don't contact them, but what I am going to say is they're going to charge you a pretty penny. And if you can contact the IRS yourself, then do it. But if you want to have a third party or someone contact the IRS, then you could do that too. But just understand you have options. You don't have to go outside to have somebody come in and help you resolve this. You can do it yourself.
Tara, what we discussed, individuals filing taxes. Now, businesses is a whole separate thing. So What are the common pitfalls of businesses when they file their taxes? Now, I know business entities, they can be a sole proprietorship,
Yeah.
LLC, corporation, et cetera, et cetera. So can you kind of tell the audience, in your experience, what pitfalls or mishaps businesses have experienced when they do file their taxes?
Some of the pitfalls is, they're not writing off all the deductions. And I'm going to talk about my personal experience, not only with the IRS, but also as a tax preparer within my own business. I get a lot of clients that, they come in and they want their taxes done, but I also tell them, give me your last 2 years, because you have 3 years to amend your taxes. So I always want to make sure that, one, they were filed correctly. Two, that if there was anything that was missing, then you have time and you can get that corrected so that you can, recoup what you didn't get when you first initially filed. But, they don't review their taxes. When you have your taxes prepared at the end of all tax returns, whether it's an individual filer or it's a business, there's that blurb that says that under penalty and perjury, you sign that. Regardless of who filed the tax return, you sign it. So that makes you responsible for whatever they put on that tax return. And by not reviewing the tax return and going over the numbers, the totals, the deductions, the credits, you're not you put yourself in a position to where, there could be a lot of mistakes. Just because someone prepares them and they have the expertise to prepare them, don't mean that they prepared them correctly. And you always want to, go back and review what was put on that tax return, because you're the one who's going to be held liable. It's your business. It's your income. So you want to make sure that whatever they're doing it correctly. And if you don't understand it, that they're explaining it to you. That's the key thing, is if they, if you don't understand it, that they do explain, whatever questions you have.
Wow. Dr. Sandra Easton has a question. As an entrepreneur, she files quarterly estimated taxes and feels good about it. Would you share why it is to a business owner's advantage to file them quarterly, and how easy is it?
It is really easy, and then I do apologize, but can you repeat that question? Because I want to make sure I heard a part of that correctly.
Sure. As an entrepreneur, I file quarterly estimated taxes and feel good about it. Would you share why it is to a business owner's advantage to file them quarterly, and how easy is it?
It's, like I was saying, it's real simple. And thank you, Dr. Sandra, for, asking the questions. Is one, it puts you in ahead of the game. So when it comes time to file your tax returns, you already have the money set aside. Now, what happens is, when you file a business tax return, if it shows that you're owing, at the beginning of the year, or when you file your taxes, then the IRS can force you to make quarterly estimated. So it's always good to be on top of the game. One, it lets you know how the business is doing, because each quarter you can see if you're staying the same, if you're growing, or if you're going a little backwards. So you kind of do a check every so often to see where the business is going, and then that way should I make some changes? Is there some adjustments I need to do, instead of waiting till you get to the filing deadline or the filing time frame, and you're trying to figure out, okay, what did I do? Where did it go wrong? How do I go back? Or if it happened in January, did it happen in November? The time frame, because when you're filing them quarterly, you can see how the business is doing and progressing.
Wow. Melodic Kisses has a question. Can you write off your gas? And I'm going to add to that. But if you can write off your gas, can you write off, let's say, as a business owner, as an entrepreneur, can you write off supplies you buy for the office, copier, printer, ink? Can you kind of go into that, Doctor? We would just love to hear that question, that answer.
Yes. Now, as a business, if you're using your vehicle in the business, yes, you can write off your gas. You have to decide if you're going to write off your actual gas expenses or you're going to take the mileage expenses. And next year in 2024 is going to go up to 65 and a half cents. So you just decide how you want to do it. But in a business, when it comes to your vehicle, you're writing off, if there's monthly payments, the insurance, if you're, car washes, repairs, tires, you're writing off all those things. If you have a home office or if you actually have a separate office, you're writing off, if you're paying, rent on that office, all equipment, your chair, your desk, your computer, your printer paper, your ink, your pens, your staplers. I mean, it's a lot of things that you can write off. Also when you get your taxes prepared, for the business, even if it's with the 1040, you write off, what you paid the tax prepared to get the taxes done. If there's bank fees or credit card fees, your cell phone, membership, dues, if there's travel, which includes airfare, hotels, vehicle rentals, taxis, meals, legal fees, advertising. I mean, the list is substantial. There's a lot of write-off opportunities that you have. And that's why it's important that if you're going to go into business, it would be a very good investment if you go to someone, a tax planner, someone that can look at your business, look at what you're doing specifically, and help you decide what all your deductions are. So that way you're prepared. Go right ahead, Dr. Michelle.
That's okay. We're going to hold that thought. We got to take another station break. We'll be right back. Keep the questions coming. It's Your Life with Dr. James J.C. Cooley. We'll be right back. We're back. It's Your Life with Dr. James J.C. Cooley with our amazing guest, Tara Monangai. And we are just so excited and just really honored to hear all the information that she has to impart to our audience. And please keep those questions going, whatever live streaming platform you're viewing this show on. So Tara, we got a lot of comments here and questions for you.
Good.
You're definitely bringing it. So let's talk about changes in tax laws and regulations impacting businesses. Can you kind of go in a little bit into that, and how do businesses stay compliant with these tax codes?
Well, one way to stay compliant with the tax codes is knowing which tax codes apply to you. So like I was saying earlier, it doesn't matter how many tax codes there are. You just want to focus on what tax codes are relevant for you. And there are ways that you can do that. I know a lot of people have softwares, when it comes to, their business. And a lot of the softwares, they're updated with the tax laws yearly. So that's one way to stay current. Also, talk with your tax preparer. The IRS, have news releases that they offer on their websites that you could check periodically to see, what changes or what, codes are, being updated, throughout the year.
Tara, what options are available for individuals who basically can't afford to pay the taxes that they owe?
There are a lot of possibilities. Now, the IRS has what is called a currently not collectible status. And basically what that is if you're in a hardship and you can't pay your tax debt, or, you're having a hard time making ends meet, what the IRS will do is they will put you in a currently not collectible status. So they're not actively looking for you to resolve this tax debt. It's reviewed every year. So you don't have to worry about having any notices, mailed out to you, having the possibility of your bank being garnished or your wages being garnished. But once you get that letter, it'll just ask you if there's an update, if you're at the point where you can start making payments, then you have that option. If you can't, then you just ignore it and another year will roll by. What will happen is, when you file your taxes, if it shows that your income has increased or you can now pay, the balance, then what will happen is they'll take you out of currently not collectible. And then they'll start, trying to get you to resolve the tax balance. Also, as long as you owe, if you get a refund when you file your taxes, that refund will go toward whatever balance you have. So, it will, eventually lower it down. But on top of that, the interest and penalties will continue to accrue.
Wow, there are people who file their own who do their own taxes, or get a cousin or a family member or friend who maybe is not a CPA or whatever, not a tax professional, to do their taxes, or they go to a tax professional. How important is it, and what recommendations can you give to the audience on finding a qualified tax professional? What things should they look for?
Well, when you're looking for a tax preparer, you want to, I'd say pick 2 or 3, maybe 4. Set appointments with them. Go and talk to them in person. Ask them what their process is. Is it just I drop my taxes off and then you prepare them and then you let me know they're done? Is this going to be, kind of a back and forth type of dialogue? Once you look at this, if I'm missing documents, if I'm not claiming something where you think based on what you see, if I should, you're going to contact me, you're going to, let me know what my options are? Or is it just basically I'm just going to drop this off and you're going to prepare the return and that's it? You want to find out, if they are current with, having their P10 updated, which is a prepared tax identification number.
Mm-hmm.
In order to file or prepare tax returns, you have to have a P10 number. And you get that only by filing it through the IRS, the application through the IRS. You want to make sure that they're going to explain things to you. You get a lot of preparers who are just like, just let me do my job. I'll take care of it. You don't worry about it. You don't want that kind of preparer. You want to make sure that they're going to talk to you and explain to you, because like I said earlier, you are, ultimately responsible for what they do. You also, you can also check and see on the IRS website, have they been disallowed to file tax returns? The IRS will, disallow preparers from filing tax returns. A lot of people don't know that, and you want to pay attention to that, because they could be filing, fictitious returns, and they've been warned by the IRS and disallowed, preparing tax returns.
Wow. Now, almost towards the end of the show. So Dr. Sandra has a question. She says, are you available to assist others or businesses in preparing taxes throughout the year with the goal of not getting in trouble with the IRS?
Thanks for the question, Dr. Sandra. And actually, I am. But that, I have a tax preparation business that's called Tara's Tax Truths. But as far as helping people with understanding, their business, their tax filing requirements, anything like that, Pennies Add Up, this business that I started, I'm going to start in November, setting up, and it's an 8-week seminar. It's 1 day a week for 8 weeks. And I'm going to go over a lot of the IRS issues, the IRS, requirements, explaining a lot of things in details to help you, get comfortable with what information you need to file your taxes, resolve tax debt, contact the IRS and resolve issues that you have. I will also I offer tax planning where we can meet. You can we can talk about your unique tax, problems, your business, what you want, what you expect, and I can help you, form your business structure, give you an in-depth, detailed list of all the things that you can deduct based on the type of business you have, so that you can keep your books, current, or make sure you're keeping the correct records. So when you file your tax returns, also, I'll be offering a membership. You might not want help with the business aspect, or, you don't have any, you don't want to take the seminar, but you might have questions periodically. So I will be doing memberships where, you can, ask me questions and I can, give you answers.
Thank you. Thank you so much, Tara. We're done for the show today, but we want to thank you, audience. Michelle said, thank you so much for the helpful information. Audience, thank you. You had those questions, keep coming. And we'll see you next week on It's Your Life with Dr. James J.C. Cooley. See you then.
Bye.